What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 8th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to spend some time to not only talk about Bitcoin and crypto markets, which, yes, in the near term have not been incredibly eventful, but as they are on a cusp of a major support range that could potentially be broken, we need to talk about the growing concerns in the macro environment. There is a lot going on in the macro scene, especially when it comes to a big technology company, the biggest company in the world, Apple. And I know it may not seem like it's directly tied to crypto, but as much as people are getting really excited about the upcoming Apple event that's going to be here up on September 12th, we've also got a lot of macro concerns. Let's go ahead and dive into all of it and more as we go throughout the video. If you guys happen to enjoy it, consider dropping a like, and let's go ahead and kick off the rambling. All right, I want to go ahead and spend some time here to talk about what's been going on here in crypto markets before we dive into the macro scene. Again, on the weekly time frame, not a significant change in the past 3 weeks. We completely retraced those gains from the supposed victory for Grayscale against the SEC. So again, markets are realizing after the SEC delays on the Bitcoin ETFs that there's no guarantee that we're going to get it here at this kind of critical time where we need follow through for the bulls. So there's got to be some other kind of narrative here, or there's at a minimum got to be buyers here continuing to support this range like they did back in June, hopefully turning prior resistance from August of 2022 and previous resistance in February 2023 into new support. That's exactly what price is trying to do now. Whether or not it's going to be able to do that, like it did back here in May, that's another question here. But essentially, it's going to be a question of whether or not we can actually get support there and clear through there. And I think as we failed the ascending channel, as we faced multi-month resistance there, I think you guys know where we stand on that. More importantly, though, beyond an ETF narrative, beyond the halving event, beyond all these topics you guys probably already know our opinion on, I want to go ahead and spend some time here to talk about what's going on with Apple, the largest equity and asset in the world when you subtract government debt, right? Apple is a massive asset, maybe if you exclude gold too as well, but Apple's a $3 trillion company, roughly speaking, huge company. Well, just over the past 2 days, after having about 2 weeks worth of acceleration, 2 to 3 weeks here of increased price action in Apple's shares, after already taking a pretty steady decline here from around $198 a share down towards $172, after a pretty solid retracement, hoping to fill that gap. I think many bulls were chasing that level at 190. Many of them got trapped. And within just 2 trading days, we saw Apple correct 7.5%. Well over $200 billion in market capitalization loss. For perspective, if you were to take that same amount of valuation contraction on Bitcoin's market cap, you're talking about a 40% pullback, being a $500 billion asset. Wow. I mean, that's huge. So the big thing here I want to talk about, and I understand 7.5% doesn't sound like a lot. Hey, we already had this here, Nick, and then we retraced it. Isn't Apple just going to, buy back its shares and go back up? Well, we need to understand why Apple dropped this much, and it's a news story not many people are talking about. If you guys are watching, the vast majority of crypto analysts out there, again, so many are focused on crypto-related news. Where we differ here is focusing on the macro scene. And I'm not saying there aren't other people talking about it, but I have not seen one single YouTube video so far talking about it. You've not only got macro concerns here like the ECB hike or pause dilemma that's going on, so these kind of typical macro topics some people may be discussing about central bank policy, but what we've got to chat about is what's going on here with Apple. Days before the supposed iPhone 15 launch that's going to be revealed here in the coming days during the next major annualized event for the new iPhone release, Apple is facing some serious issues in its second largest market, China. Now, you all know very well here, you've probably heard it in the headlines for the past year or two, really since the pandemic, that due to concerns around the control of manufacturing of semiconductors, the issues around supply chain issues, supply and demand equilibrium, and also with China being more of a heightened state of aggression with the United States, and just generally the geopolitical tensions of Russia and China against the Western world, and vice versa. I'm not saying anyone's in the right or wrong here. It's just the reality situation, right? We're essentially in an environment here where supply chains are localizing. And this is going to be a decade-long process that is not only going to cause a lot of disruptions, but is also going to have a lot of big shakeouts along the way where people originally thought things were just going to go as intended and earnings were going to continue to expand. And Apple is going to be one of these companies that is likely going to get hit On Wednesday, the Wall Street Journal reported that China has banned the use of iPhones for central government officials, and that those working within the state government can no longer utilize it for work purposes. This essentially is an effective ban on state employees within China utilizing mobile phones made by Apple. But while it may not sound like a big deal, especially considering that Apple is a global business, when you understand that China is the second largest market and just how wide-reaching this ban could be, it could really start to put a dent on Apple's growth numbers over the next couple quarters and years, especially with the rollout of the iPhone 15. The first thing we need to consider here, above all, just within the data we have here, is that this effective ban is not just for government employees who work on more local or national levels within China, which alone is already millions of individuals. But when you consider the fact that it also includes state-backed firms or enterprises, including energy giant PetroChina, which alone employs hundreds of thousands of people, you start to realize that the numbers are going to start to add up here. In total here, from the numbers we have back in 2021, there were over 56 million people who worked under state-owned units or entities, essentially meaning here that this is going to have a huge weight on the valuation contraction of Apple as a company. Now, I want to go ahead and clarify. I understand here, as many of you are probably saying, that, Nick, China has a population of 1.4 billion people. Is it really a cause for concern that, say, 55 million people or a couple percentage points of that population can no longer buy iPhones? Is that really a death sentence for Apple? No, I'm not here to say that Apple is going to die as a company or anything. Don't take it as that. I don't want to be too doom and gloom. What I do want to say, though, is that this could have huge ramifications and could be a sign of the times to come here in the next couple of months. What I mean? Well, first off, here in the near term, this alone could put a significant dent in Apple's continued growth and its PE multiple that it's trading at, because of the fact that China itself is a huge segment of its market. In its most recent quarterly report, ending in June, the Greater China sales increased 8% on an annualized basis to $15.76 billion. It is Apple's fastest growing region in the globe when it comes to iPhone purchases. So we need to consider that Apple's flagship product is dependent on growth in China in order for it to continue accelerating revenues and therefore also income as well. And that is why people are paying a 30 PE multiple on Apple as a company. A much more realistic valuation would be 15 to 20, not 30. So we're already seeing a premium here on Apple based off of this strong growth in China, which, to be fair, is really good. 8% on an annualized basis on a market as big as China. Not a bad deal. However, we need to consider here that there is something much bigger likely going on here. An analyst from Bank of America wrote on a note on Thursday that the potential iPhone ban comes on the heels of a new high-end flagship smartphone released by Chinese manufacturer Huawei, and essentially that they're likely going to roll this out to government officials first, and I think much more long-term, that China is using this as an initial move to test building a new mobile phone for the masses within China, not just for some group of government officials, not just for state-owned employees. That will be the test bed of where it will be. But eventually, I think long-term, they're looking to push Apple out of the market. And I don't know if they're going to be able to pull that off. I don't know if China really has enough societal pressure to really force people to give up their iPhones and make that switch, and it would take a very long time. But even the fear of something like that happening is enough to send Apple as a product and as a company into a death spiral. It is something that could put Apple in serious valuation contraction over the next couple of months and could lead towards a lot of volatility and uncertainty. Now, essentially speaking, I don't know how things are going to play out here over the next couple of days and weeks. What I do know is that Apple right now, at a valuation perspective, is trading at a $2.7 trillion market cap, a 30 PE multiple, and I know that at the moment, we are currently at practical all-time highs throughout Apple's history, well beyond where it was over the past couple of years and well beyond the historic trend line. We have signified here for a long period of time that Apple could very well come down here towards valuations of a share price anywhere from around $90 to $100 per share. I know it sounds crazy for Apple to pull back practically 50% from its relative all-time highs at $200 a share. But I think psychologically, markets are getting ready for something like this. A serious and real bear market contraction. One in which Apple never really got here. We got about a 30% pullback here from top to bottom back in January 2022 and February of 2023. Within a year, just pulling back 31%. But I think we've got much further to go down. And it doesn't even mean that Apple has to lose a lot of its revenue. It could, see slight declines in growth and still go down to that share price because people pay a lower PE multiple. It just simply needs Apple to be trading at a 15 PE multiple. The financials could stay the same, but lack of growth could lead Apple down towards this share price easily. It could easily happen, guys. Apple has been there before. It has seen valuation contractions in the past, and with a real proper recession, as we're seeing signified by the yield curve and higher interest rates and continued contraction in the balance sheet, I think this could very well play out. And again, with volatility so incredibly low right now, we are likely bound over the next couple months after a great period of expansion in equity valuations and low volatility for us to finally start picking up. It can't likely go much lower than this, especially considering the contracting environment of liquidity, considering continued strength in the dollar here since back in mid-July, with the dollar now at its highest level since back in March of 2023, and at the same level it was back here in November of 2022. So essentially speaking, the dollar, the whole BRICS narrative against the dollar has completely fallen flat. The dollar is continuing to garner strength, and it likely will continue, not only towards our short-term target of 106, but possibly even beyond that as well. With the 2-year yield signaling here that the Federal Reserve is likely to continue keeping its target rate higher for longer and continue potentially even rising over the next meeting or two, we need to be prepared here when we're looking at stocks like Apple, but also when it comes to Bitcoin. Because here's the reality, guys. I understand that Bitcoin is not a company. I understand it doesn't depend on, selling products to certain countries. I understand that Bitcoin, as many in people's mind, is this kind of asymmetric asset that isn't owned by governments, that is finite in its supply, and it will be A-okay no matter what happens to Apple. But I got to tell you guys something here. Bitcoin being a global asset, Bitcoin being this mature asset where we're now talking about ETFs and futures contracts around Bitcoin and it being a $500 billion asset, I gotta tell you guys that at the end of the day, Bitcoin is impacted by this. It is no coincidence that since back roughly after the FTX collapse, since back in October, November, when equities were expanding higher, Bitcoin was also moving higher as well. And ever since we've seen equities starting to stagnate, Bitcoin has continued to stagnate. And it's the same reason why when we take a look back here from March of 2020, where Bitcoin set in its relative bottom, all the way up towards March of 2021, we saw both Bitcoin, crypto, and equities all rising in alignment and declining in alignment. We can't live in some fantasy world where if Apple is contracting from a $3 trillion company to a $1.5 trillion company, that is not going to have some impacts on Bitcoin. And I got to tell you guys, I'd even make a pretty bold claim in many people's mind, that will have a bigger impact on Bitcoin than any halving event, any Bitcoin ETF, any narrative you can think of. If that scenario plays out, I'm not saying it's a guarantee, but I think it's a likely scenario. If that plays out, you could easily see Bitcoin coming down here to new lows at around 10 to 12K, at least coming back into this channel and continuing to extend this bear market for a longer period of time. And again, it's not me just trying to be negative here, guys. It's me looking at some pretty big concerns here. There's a reason when Apple drops $200 billion market cap, we gotta listen to that. Those small percentage declines, while they seem small, are magnified when you consider Apple's valuation and the weighted impact it's going to have on other equities like Microsoft, the FANG stocks, and even the broader stock market as a whole, and even cryptocurrencies. From Bitcoin to your favorite altcoins. It sets the tone for investor sentiment. If the market leaders are not leading, without leadership, you can't charge forward. That is one of the biggest rules of formulating bull markets. And we are here in the game of trying to find the next bull market. And if we don't have the setup, we don't chase it, especially when you can get a risk-free return for practically 5% on an annualized basis. The higher bond yields go, and the more uncertain the future looks for assets like equities and crypto, the more we are going to see people favoring the initial option of taking bonds and the risk-free return. And that's going to have a weighted impact on crypto for years to come, until it starts to change. Anyways, guys, I've rambled on a good amount here. If you enjoyed this video, consider dropping a like. It is one of the greatest ways you guys can support the channel. Share it with family and friends. And again, I don't mean to be bashing Apple here as a company. I've used Apple products a lot of my life. I think they build many great services. But at the same time, all companies eventually reach their peak. All companies eventually reach their growth potential. And after that, if you get caught holding the bag, it'll be like buying into Cisco and the dot-com bubble. It'll be like buying into ExxonMobil or buying into a variety of companies out there. General Electric is a great example that seemed too big to fail, that just kept growing and expanding, that seemed like timeless names. And while they may still be here today and they might have their position in the world, they didn't continue growing. They reached their cap. And that's okay. That's normal. We can't have unlimited growth in all companies. It's just the way it works. Only so many people on the planet, only so much opportunity to grow. We got to keep that in mind here, because if we get caught up in the valuation contractions and the reduction of those PE multiples, the price to earnings ratio, we can end up losing a lot of money. So, anyways, guys, have a wonderful rest of your day, and I'll see you guys on Monday. Take care and have a great weekend wherever you are.